One of the things I also wanted to ask is about, ohm and time, right? Is there a situation where if the collateral that these protocols hold, because as I understand it, right, you give them AVAX and ETH, and they issue you, the ohm or the time token. So first of all, is that correct? That's how that works?
Yeah, sort of. So what they do is they're trying to make a monopoly of the liquidity. So Ohm at the moment is not listed on any exchange. So what they do is they said, like, you know what, give us your LP tokens. Like, let's say give us like two different assets, or give us one asset, and we'll give you 2-3% discount on Ohm. And basically because of that, and they also charge you transaction fees. So because of that, they're able to build up their treasury, and they
Okay.
also earn interest on their treasury, and basically control the liquidity. So initially people had thoughts that, you know what, OHM just cannot have a sell off, but that was wrong. Their aim was to become a reserve currency. So US dollar, the aim of the reserve currency is not to appreciate over time. The aim of the reserve currency is to be stable. So initially there is a lot of volatility. It went to 500, went to 600. Now it's collapsing back to 100, 120, and so on and so forth. I think eventually it will become very close to a treasury. So let's say if treasury is 2 billion or 1 billion, whatever the treasury amount is, it's going to trade around like 5 to 10% bracket around that, unless they deploy their treasury in certain ways that can benefit them. So what happened at the moment was, in their treasury they had Ethereum, they had different other assets. When the market collapsed, their treasury also went down. When their treasury went down, people basically panicked, started selling rather than giving them liquidity. They started selling. And I have an interesting tweet to educate some of the some of the uh, customers we have over here. One second, let me just pull it out. So I basically highlighted this few days ago. So this is it. So this was from their white paper. Sorry to be a bit dramatic over here, but I kind of knew this few days ago. Like this kind of event will happen. You're seeing across all OHM kind of plays. So Time, Wonderland, even Rome DAO in Polka on Kusama is kind of facing the same issue. So this chart basically shows you, if everybody is taking their own, you have a very good scenario. You get yield, and the coin pumps and you benefits. If somebody stakes and somebody bonds their ohm, you have this scenario where, it's still a decent outcome. But the horrible outcome is when you are selling and everybody else is selling, you get this -3 outcome. And this is what we are facing at the moment, because all the treasury, the assets are depreciating, the treasury is squeezing up. It was trading at like 3-4x premium, and now that premium is evaporating away. So like those are some of my thinking when it comes to basically
All right. Well, thank you for educating us on that. So I think if I could, sort of encapsulate it, a lot of people sort of FOMO'd in. They gave their ETH and their AVAX or whatever, the bigger coins, to these protocols. They issued them either like ohm or time, right? Now, when everyone started to unstake, or when like the time or ohm, coins started to crash, you had a combination of the collateral inside the protocol going down and everybody kind of panic selling the monopoly money. So it kind of accelerated. Do I have that right?
Yep, spot on, like absolutely
All
dead
right.
on right. I couldn't articulate it as well as you do, Bill. So this was exactly the issue. It's like Zimbabwe hyperinflationary money, right? So this token was hyperinflationary. They are just giving you a high inflation just to stake coins. Don't get me wrong, the vision was interesting, like protocol. So the key takeaway, the educational element that the whole crypto and DeFi sector learned was, you know what, protocol can own the liquidity and can basically intervene in the market and stabilize price. I think this is very important. I think this is a takeaway. But sadly for a lot of investors who basically aped in without studying or didn't know the risk. So I know Ian liked it, but he knew the risk that this is kind of like a Ponzi scheme. And it doesn't matter even if it's a Ponzi scheme, you can still profit as long as you're early. And sadly, those people who went on Twitter, saw Daniela and all of the people hyping up Frog Nation and OHM, they basically FOMO'd in. They didn't study, and it's like everybody herded in, and they kind of forgot that whatever goes up can also go down. But in case of ohm and time, it goes up fast and comes down fast, and they forgot that and FOMO'd in, and sadly we're kind of seeing blood in the street now.
Got it. So as I know we don't want to be too bearish, but if there is kind of a flash crash or even a bigger bear market in crypto, I mean, is there any chance there could actually be more downside in these ohm or time tokens? I mean,
Not time as much, but I think ohm could definitely see that because their treasury is still trading 2-3x premium, whilst time treasury is I think very close to its market cap, the actual market cap out there.
All right. So it is safe to say that if you're going to get involved in this, you've really got to know, you've got to do the math as to what the treasury is worth and see whether or not the token is kind of going back to equity speak at fair value. Is it trading at a premium to what they call NAV or the value of the assets, or at a discount, right? Is that a good way to talk about it?
Yes, I can show people like, see, I'm not a specialist on this matter, but I think Coin Market Cap has the TVL of all of these coins. So maybe I'll just quickly pop this out and
Yeah,
show
sure,
people
pull that up, because I know there's a lot of people asking about these coins, and this is kind of the prep for the worst live stream. So, feel free to pull that up and, give us whatever knowledge you can.
Yep. 1 second. I'm just trying to figure out if they have a TVL over here. So apparently in Coin Market Cap, you don't have a TVL. So let me go to CoinGecko.
All right. So one person commenting here says, all my funds are invested in time, but I'm still up because of the APY, right?
Yes.
I'm at the same amount I started, but when the price goes back up, I'll do better. So this is the flip side. What happens if these coins get to sort of fair value and they bounced? Because one guy is asking, will they ever recover? So maybe if Mehdi can pull this up, we can take a look.
I think the scenario will be very saddening, guys. So Olympus is at the moment $110, and TVL over here, you can kind of think of it as its treasury. The fully diluted valuation at the moment, or even the current market cap, is around 1 billion. So it's still trading 3-4x times its treasury value. So yeah, I think it's going to be painful. So what's going to happen is that as the price drops, ohm APY will increase to kind of facilitate the stakers. But since there is such a big discrepancy in the TVL market cap, people rather than staking will perhaps take profit. So unlike a lot of investment, this is a zero sum game. It's not like growing the pie, it's a zero sum game. Whoever got in early, let's say when ohm was $30-$40 and the APY were in millions, they basically are dumping the bags on you. So if you get on Olympus now, like personally, I don't think it's a good strategy. And why get the headache, guys? I just gave you some amazing alpha that with your own research uh, you can earn a lot of money with derivatives next 3-4 years. Time, I think over here, I think it's slightly different. I think TVL is higher than this, but the gap isn't that much. I think the OHM, the gap is 4x. Over here, the gap is like the difference of 40-50%. And I think a lot of this gap, I'll still be willing to pay that premium because Daniela is going to use that money to buy VC deals. And we know that VC deals, they have access to good deal flow. And those VC deals in a bull market can 20x, 30x, and retailers do not have access to that. So me and you, like normal people like us, we don't have access to that. Only rich people, powerful people, builders have access to that. So you can take advantage of that. I don't know if OHM is doing that. I'm not aware. So this is a metric you have to see. CoinGecko might not be accurate, But go on their website, go on Times website, see their treasury value, see the TVL, and see the market cap currently. If market cap is 1.2 billion and TVL is 400,000, uh, basically you are paying premium to own it. So we like to be value investors rather than hype investors or what other people are doing. Other than this, see, 11,000 coins. Let's just, if you took the hit, you're down 20-30%. If you don't have conviction because you bought it since one of your friend told you to buy it or somebody from Twitter was shilling it, if that's the reason why you got in and you don't understand the rationale, take 20% loss. I assure you, not financial advice, you'll see a lot of hidden gems and other amazing crypto projects that will more than compensate for you. So yeah, just move on.
All right, good advice. Good advice for risk management. Remember, folks, the best investment strategy is the one that helps you sleep at night. Now, for my next topic,
Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.